In Chapter 1, Managerial Accounting and Cost Concepts, we will explain how managers rely on different cost classifications for different purposes. Let's first take a look at the cost definition. What's cost? A cost is a monetary measure of economic sacrifice made to obtain some product or service. Let's first take a look at Learning Objective 2. Identify and give examples of 3 basic manufacturing cost categories. In US, there are 3 types of companies: merchandising companies, manufacturing companies, and service companies. Merchandise companies do not produce products themselves. They purchase merchandise from another company or factory and sell products to customers, such as Target, Walmart, or Costco. Manufacturing companies produce products themselves and then sell products to customers, such as Dell, Intel, or Apple Incorporation. Service companies do not produce any products at all. They provide services, such as CPA firms or law firms. In the Intro to Financial Accounting class, most cases are merchandise companies. And now in managerial accounting, we will focus on manufacturing companies. Let's take a look at manufacturing costs. Manufacturing costs normally are grouped into 3 main categories: direct materials, direct labor, and manufacturer overhead. These costs are incurred to make a product. Direct materials. Direct materials are raw materials, which become an integral part of the product, and it can be conveniently traced direct to it. Examples include aircraft engines on a Boeing airplane, the Intel processing chip in a personal computer, or the radio installed in an automobile. Here, please distinguish between raw material and direct material. Raw material is a more comprehensive concept. Direct material may be part of raw material. For example, let's say the tires in the car are made of rubber and steel. But we cannot just simply say steel is a direct material, because in a car there are thousands of screws also made from steel. It's hard to directly trace the cost of screws, so we cannot say steel is a direct material of the car. Direct labor. Direct labor includes those labor costs which can be easily traced to individual units of a product. Direct labor, sometimes referred to as touch labor, because it consists of the cost of workers who touch the product as it's being made. For example, usually it may take 20 to 40 hours to assemble a car. So the 20 to 40 hours labor costs paid to workers working on the assembly line is a direct labor cost. Manufacturer overhead. Manufacturer overhead includes all manufacturing costs except direct materials and direct labor. These costs cannot be easily traced to specific units produced. And sometimes we call manufacturer overhead as indirect manufacturer cost, factory overhead, or factory burden. Manufacturer overhead includes indirect materials and indirect labor. Indirect materials are materials used to support the production process, such as lubricants, cleaning supplies used in the car assembly plant. Indirect labor costs include wages paid to employees who are not directly involved in production work, such as maintenance workers, janitors, or security guards. Other examples of manufacturing overhead include maintenance and repairs on production equipment, utility cost, property tax, insurance on manufacturing facilities. Here's one question. Is depreciation manufacturing overhead? In the Intro to Financial Accounting class, you've learned depreciation. Depreciation is for PPE, property, plant, and equipment. For all PPE except land, we should do depreciation. We allocate the cost of PPE to expense systematically and rationally. This process is called depreciation. In Intro to Financial Accounting class, almost all examples we use are merchandise companies. So, in the property, plant, equipment of merchandise companies, if there's any depreciation, we debit depreciation expense. We credit accumulated depreciation. However, in managerial accounting, most examples are manufacturing companies. For manufacturing companies, if facilities are used to operate products or to produce products, then we will not expense depreciation. We will recognize depreciation as manufacturing overhead. So again, for manufacturing facilities, depreciation will be recognized as manufacturing overhead, but not depreciation expense. If facilities are used for non-manufacturing operations, which we will talk about later, then depreciation of those property, plant, or equipment will not be recognized as manufacturing overhead, but still depreciation expense. In practice, direct materials and direct labor are called prime cost. Direct labor plus manufacturing overhead is called conversion cost, because these costs are incurred to convert direct materials to finished products. In addition to manufacturing costs, manufacturing companies also incur non-manufacturing costs. For financial reporting purposes, these costs are typically classified as selling costs and administrative costs. On the financial report, normally you will see the item called Selling, General, and Administrative Costs, or SG&A. Selling costs include the costs necessary to secure order and deliver the product. Examples are advertising, shipping, sales commission, sales salaries, and costs of finished goods warehouses. Administrative costs include all executive, organizational, and clerical costs. Examples include executive compensation, general accounting, public relations, and similar costs involved in overall general administrative of the organization as a whole. Let's take a look at the example. Your Boat Incorporation assembles custom sailboats from components supplied by various manufacturers. The company is very small, and its assembly shop and retail sales store are housed in the Gig Harbor, Washington boathouse. Below are listed some of the costs which are incurred at the company. Required. For each cost, indicate whether it will most likely be classified as direct labor, direct materials, manufacturing overhead, selling, or administrative cost. Let's take a look at one by one. Number 1. The wages of employees who build the sailboats. This is direct labor. Employees directly touch the product. Number 2. The cost of advertising in the local newspapers. Advertising is a typical selling cost, so this is classified as selling and administrative costs, S&A. Number 3. The cost of an aluminum mast installed in the sailboat. This is direct material, which can be directly traced to a product. Number 4. The wages of an assembly shop supervisor. Supervisor is indirect labor, so this is manufacturer overhead. Number 5, rent on the boathouse. This is a little bit tricky. The boathouse is very small. If we go back, take a look at the question here again. Assembly shop and retail sales store are in the same place, boathouse. So the boathouse is used for assembly and selling purpose as well. So here, rent on the boathouse will be classified as both manufacturer overhead and S&A. Number 6, the wages of a company's bookkeeper. This is the general accounting, and this is a typical administrative cost, so S&A. Number 7, sales commissions paid to the company's salespeople. This is a selling cost. Depreciation on power tools. Power tools are used to assemble the sailboat, so this is facility to operate or produce product. Depreciation on manufacturing facilities should be classified as MO, manufacturer overhead, but not depreciation expense. Moving on, let's take a look at learning objective 3. For the purpose of preparing financial statements, we can classify costs as product cost and period costs. Product costs. Product costs include all the costs which are involved in making the product. Product costs include direct materials, direct labor, and manufacturer overhead. Do you remember matching principle learned in financial accounting? Matching principle means expenses follow revenues. Expenses should be recognized as the same period as revenues. So here, products costs in the beginning will be recognized as assets. When the products are sold, product costs will be recognized as expenses. Let's take a look at the T accounts here. In the beginning, product costs will be recognized as assets on the balance sheet. When products are sold, we will transfer from assets to cost of goods sold, which is expense on the income statement. For period costs include all selling costs and administrative costs. Period costs will be recognized as expenses immediately. Let's take a look at an example. Which of the following costs would be considered a period rather than product cost in a manufacturing company? A. Manufacturing equipment depreciation. Depreciation of a manufacturing facility will be classified as manufacturer overhead, but not period cost depreciation expense. So A is a product cost. B. Property taxes on corporate headquarters. Corporate headquarters are for general function. This is not for manufacturing purpose. So property taxes here are period costs. C. Direct materials costs. Direct material costs are product costs. D. Electrical costs to light the production facility. Costs involved with production facility or manufacturing facility should be recognized as product costs, specifically manufacturer overhead. E. Sales commissions. This is a typical selling cost. This is period cost. Now, let's go back, take a look at learning objective 1. Understand the cost classifications used for assigning costs to cost objects, direct costs, and indirect costs. Cost objects could be products, customers, job, or organizational subunits. For the purpose of assigning costs to cost objects, costs are classified into two classifications: direct costs and indirect costs. Direct costs are costs which can be easily and conveniently traced to a unit of product or other cost object. Direct materials, direct labor costs, they are direct costs. Indirect costs are costs which cannot be easily and conveniently traced to a unit of product or other cost object. Manufacture overhead is indirect cost. This is a summary table here. If we take a look at the total costs, for the purpose of financial accounting, we can classify total costs as two big categories: manufacturing costs and non-manufacturing costs. Manufacturing costs are also product costs. Manufacturing costs include direct costs and indirect costs. Direct costs are direct material and direct labor cost. Indirect costs are all manufacturing costs. The sum of direct material and direct labor is prime cost. The sum of direct labor and the manufacture overhead is conversion cost. For non-manufacturing costs, or period costs, they include selling cost, administrative cost, and also research and development cost, R&D cost.